Hey everyone, welcome to the Change Stories podcast. Here with your host, Tony Kryptonio. Today we have someone very special, Chris from Plume Network. Chris is working in something very interesting that we're seeing, and I never seen before in my 10 years of crypto history. He's bringing the real world to chain on chain. And I think this can really disrupt the way that we've seen value accruing in blockchain. Chris, I would love to have a little intro of what you've been up to and what inspired you to start Plume.
Yeah, totally. Thanks for having me today and excited to get into all this. Well, we started this project with a very simple idea. We wanted to make it easier to access the reward on chain. Basically, me and my co-founders are all crypto natives. We interact with mostly crypto native assets from doing things on chain, whether it's swapping, buying things, lending, borrowing, earning yield, whatever it is. We think that's just a better way of doing things here. You connect to the whole world at once. It's 24/7. There's no gates. There's no barriers. You do whatever you want, right? And there's a lot of permissionless innovation. People creating new things all the time that are really fun and interesting and exciting new stuff. And it just keeps it all going. Unfortunately, the real world doesn't work like that. And there seems to be a partition between these two things. There's the on-chain world today, which is folks like us, right? And there's the real. And they seem to be two separate things. And we always want to say, look, but I'd love to interact with the real world just the way we do with crypto native assets. If I want to have something, I should just buy and swap and hold it and earn some yield against it. I want to be able to trade and speculate on those things. I want to take a loan out to get something, I should be able to, right? And as we looked more, we found that so many things in the real world had the same dynamics, but we're just not set up in the way to do this. So we said, look, we could put this together in the same way, just at a personal and selfish level, make it easier to do things, right? In the way that we like them. Now, I think the thing that we're a beneficiary of and fortunate is like a ton of macro stuff happened around the same time that really helped us push in this direction. We had things like the BTC ETF, you have the ETH ETF, you've got all the BlackRock stuff with Larry Fink, you have treasuries at 5%, right? You have the election, Gensler resigning, all these things came together to really give us a lot of tailwinds behind what we're doing. But that's the original idea.
And were you in blockchain before or you had a career in traditional finance? How was it going into this new world?
I grew up in enterprise software, in classic software. I kind of put a dad group of people and I started doing mostly Web 2 kind of classic enterprise software. I was mostly doing software as a founder before. I did a bunch of different companies. Some worked, some didn't. But at some point we had enough that I kind of transitioned over to a venture investor. And when I was doing that, I got caught up in a lot of the crypto stuff. My most recent company was a place called Rainforest QA. And Rainforest was a distributed community of QA testers around the world. So you push a button or hear an API call, right? And these people would come test your software for you. So you'd have an on-demand QA team, basically, if you're building software. And you see 60,000 people all around the world testing software for you and using Rainforest as a coordination platform and payment platform. The problem is you keep making me off ramp in my native currency. And we had to build something this morning. They would rather hold BTC and ETH because all these people are in Latin America and Eastern Europe or Africa or wherever it might be. And they would rather hold USDC or just BTC and ETH. And so that's how I got sucked into all this. And DeFi summer was rare in our time and I got lost in the sauce. As I was doing a bunch of like classic venture at the same time into Web 2 startups, I found that I just spent all my time doing crypto stuff. I was still doing a lot of retail crypto stuff. I was helping founders of mine who are friends building crypto startups and doing projects and just spent all my time here going to conferences, meeting people and just helping out on stuff and ended up meeting my co-founders through a bunch of mutual friends. We've all been friends for a while and led us down to Plume.
I can see that some of that DeFi is somewhere trying to see in the rain. You should launch a project or you should launch your token. How was the process of going from SaaS to a more secure career path? Everything is much more resources out there to, I need to find a co-founder. I have this idea, maybe it's going to work, maybe not. And then starting the raise process.
Yeah, it was a shit show, honestly. In hindsight, it's always easier and it becomes more clear. And it seemed like there was a plan. At the time, it was always simple, right? I think my co-founders were always for like more like fundamental people, which is like, let's go talk to some users or customers or people, right? And see what they would do. And so we went out, once we had this kind of like kernel of an idea, we went to talk to a bunch of people. And unfortunately, I'd seen a bunch of RWA projects as an angel investor. So I knew a bunch of, so I could ask them, right? And Teddy, my other co-founder, he was at BNB before and he had seen a bunch of projects in RWA trying to deploy on the BNB chain. So we just went to talk to a bunch of them, right? We talked to a dozen of them or so in the beginning and they're all like, oh, good, this is great. I would love to use it. And we gave them build this or what? And we're like, okay, cool, that's great. But you always know the first 10 are bullshit. Everyone tells you yes. And so like, okay, let's do another 10. And as we did the second set of calls, the first ones came back and called us and they're like, so you're going to build this or what? We're ready to go. I'm like, oh shit, okay, maybe it's a thing. So we started to build it and put it together. And then from there, always lived ahead of reality in the sense that we never had the money to support what we were doing. We just didn't take salary. We didn't make any money. We brought on friends. We didn't pay them. And so we'd always just lived ahead to try and support it. And then as we hit breaking points, which is okay, like at some point we have to pay people. We went to go raise a little money to build this, or like at some point the ecosystem needs more help. Like we just couldn't do it. We need to go do that, and also bring on some partners who can really help us. Then that's when we went out and found some money. But it was never a good time either. When we raised money, it was last year, not around earlier than this time. But I feel like today BTC at 100. I guess we're under 100 now, right? But like BTC at 100-ish, right? It's all a good time. Everyone's up only, right? I think it wasn't even that long ago, but it was like not a good time. It was definitely down only. There's no cycles anymore. Everything's fucked. It's all bad. And so then we've always raised in that moment. And then even when things did start to come up, I think the liquid market's always ahead of the venture markets. And so just because tokens start to rip doesn't mean the venture markets change. And so it's still bad. And then when we finally did go out to raise, even the liquid market started to go down again. So people are like, oh, it's no good. So it's always been a grind, honestly. And it's because RWAs have so much, it's not only the market timing, like we do RWAs, obviously, right? And it's such baggage to it. I don't even want to hear about RWAs. I think most of the times RWA is an acronym for something we don't care about. It's just a grouping of things that you don't do. Oh, we just don't touch, like it don't matter. And that's why it was hard, because I think people hold a lot of that with them, and for good reason, because a lot of historical RWA stuff is a problem. It isn't very good. And I get a lot of people feel that way. Now, I think we're doing it very differently. And I think the market's changed, and also technology's changed, and there's ways to do it that are better now. And we're seeing the adoption now as a result. But there's a lot of baggage around the phrase that you have to escape. And so those are all just hurdles. But I think the benefit is the more, the better. It makes us stronger and it makes us tougher. And I think it also is humbling, because you see a lot of founders go out and they can raise $1 billion off nothing. It gets them out. Like it's never been that way for us. It's always been a grind, but I think it keeps us sharp and it keeps us humble. I think it's good. It's not supposed to be easy.
And you mentioned at the time you're a VC, you're looking at a lot of RWA deals, and this was an inspiration or planting the seed in your mind. Was there a catalyst that you said, okay, I need to go into RWA, I must do something in this space? Was it the problem you had? There was so much friction for these payments when you were doing the Web2 side of things?
It was mostly the more we saw people trying to bring things on chain, I realized it was just ridiculous in the real world, right? The thing that I remember hearing the most of was everyone we talked to said, no matter what it was, if you were bringing sneakers on chain or Pokémon cards or real estate or financial instruments or whatever you want to do, every single one told me the same thing. It took 6, 12, 18, 24, 36 months to get this asset on chain, right? And that just seemed crazy to me. And it seemed like such an obvious problem, at least. I don't know if it was the real problem, but at least was a problem. It shouldn't take you that much time and money to bring something on chain, right? Who's going to do that? Like, it's ridiculous. So God bless, we have a few people who have been like brave enough to go do it, to show us the way, but that's a very challenging thing to do. And I wasn't really around in like the 90s building startups, but I was at least told that back then you had to raise 10 million bucks to rack servers for 2 years before you even built the product, right? And that's the analogy that we drew from it. It felt like that in tokenization. You have to do all this infrastructure work that everybody is doing all the time, right? It's not even a different product. Everyone's doing the same nonsense and stumbling through it because there's no clarity. And so it takes a long time, it's expensive, and you make a lot of mistakes. And so that just seems ridiculous. Let's just start there and make that easier. And then from there, you discover problem 2, which is like, oh, it turns out when you bring things on chain, there's nothing to do with it, still sucks. And so, we have to build an ecosystem around it. To be composable, you need liquidity. And you go from tokenization and bringing things on chain to then community and ecosystem and liquidity and having a network together and all these sorts of things. And then that comes back to, okay, what more technology do you need? So how we got into it was just like, we went one step at a time, just talking to users and talking to people who are trying to build this market, and then just trying to help them step by step.
And do you think the reason why we haven't seen RWA narrative coming in previous cycles is because there's not enough infrastructure, there's not enough resources? Was there a lot of friction to do this bridge into the real world? Because it seems so obvious. Let's build what's real on chain and bridge this over.
It's a good question. I think it's 2 things. One is definitely that, but I don't think that's the only part. I think it's a huge barrier and a huge issue that even doing anything on chain is such a pain in the ass when it comes to reward assets. But I think the second part of it is there's both market dynamics, right? Which is, there are 2 parts of it. I think there's always a bottoms up dynamic and a top down one. The bottoms up one is simple. You need user demand. You can bring anything on chain. No one wants it. It's still cooked, right? And so you have to start there. And I think 2 years ago, there's a unique moment in time where the off-chain yields are better than on-chain yields. You get 2% on on-pay on compound, but really that's not as good as 5% treasury off-chain. And that led to a bunch of people sucking treasuries on-chain. And that taught people about real yield, about RWAs, and showed demand and desire for these assets. That's number one. That's the more bottoms up area. And then the top down stuff is then all the stuff we talked about. Came out the new year, BTC, ETF, BlackRock experimenting with tokenization, putting a lot of energy into the market around this stuff, right? And the election, all these things help propel it forward. So it's those market dynamics, I think, because if the market dynamics are strong enough, the tooling doesn't matter. People will figure it out. So I think the tooling that we've built in the tokenization, like, it helps accelerate it, and it hopefully expands the funnel, opens the market. But really, I think the market dynamics are a big part of it.
Awesome. That's fascinating. And you mentioned the tooling. I know Plume Network is a full stack L1 blockchain. for founders out there listening, how is this process of, okay, I'm doing an L1, I'm picking this tech stack. I myself as a VC, I get asked a lot of times the question, what chain should I build on? Should I go for Base? Should I go for Arbitrum? Should I do it in Solana? What sort of you're advising to navigating these waters, which probably can
Totally.
do so much later on?
Yes. And I would say, I'm always surprised how people make these decisions, to be honest. I would say it's often misinformed or at least incomplete, which is not to say we're right, but this is just my view, at least, having been on the other side. Technology is one, right? You have to think about the technology. It depends on the use case. If you're doing high frequency trading, you need a high throughput chain. So very simple. That's why TPS is a thing, right? And so that's number one. I think that's one piece. Number two is you have to think about liquidity ultimately. And how much of it is there? Is it really supported? Is it growing? All those types of things, right? And then number three, I think you really have to understand the dynamics of the chain, which is what's the community? What's the ecosystem like? And you want to make sure that all three of those things are aligned and they're in the same thing. Because when you look at things like Solana today, it's a very different community, a different field, different ecosystem than Base, even though sometimes they get compared. The Solana community, in my opinion, and this is a good thing, but it's a community that sort of DCA'd $5 into 10K market cap shitcoins a lot of times. And not to be overly reductive, right? Because there's a lot of great things happening, but just with the pump.fund, with the rise of pump and all these things, like it ends up being the caricature of that community. But I do think that there's truth in it. That community ends up having that feel, and you see a lot of DGen activity. That's why pump works so well there. Whereas pump's actually a fairly simple product, but it doesn't work as well everywhere else because that's where the community and the ecosystem and the liquidity are aligned. So you get great volume and adoption and usage there for that kind of thing. Versus you go to Base today, very different feel, even though it's a similar thing, right? It's a very normie feel. But because it's normie, you got like a bit of a social thing there. You got like Friendtech came out of there, right? You got Warpcast was still there, right? And you have those, even the memes are normal, right? And so that community, that audience is also different. And so depending on what you're trying to build and what you want to do for your protocol, that's how you should choose these things. Was where is there going to be the fit for you? Because at the end of the day, all these things are infrastructure, right? They should help you achieve your goals as a founder. And for us at Plume, we've designed our ecosystem for this exact reason. One, it's technology perspective, we've optimized a bunch of the stuff around the chain to make it easy to do RWAs. But two, build a community around RWAs, build an ecosystem of protocols that make it easy to make your RWA assets composable, because I think that's a huge part of the story. And then finally, we can then go find liquidity to help put this together and make it work. So I think all of this stuff is like hyper important. And that's how you should choose between these ecosystems, depending on what you want, right? And what's best for your protocol and the goals that you have. And they're not all the same. Liquidity is not like all liquidity is not created equal, right? Liquidity differs depending on what you want. Sol liquidity is much smaller than ETH, as an example. Sol's what, 5 or 6 billion, right? ETH is, I forget what it is, 20, 30 billion? I don't even know the numbers, but ETH has way more liquidity, but it's just not the same feel at all. You turn the Sol liquidity much faster, and in many places, it's going to be a better place for people to build than ETH L1. What do you think? Does that make sense?
Yeah, I think it makes sense. And I was wondering regarding Plume, how do you plan to access liquidity? Is making this L1 EVM compatible? Is it bringing through Roach with Solana ecosystem?
We're an EVM chain. That's the starting point, right? Like at the end of the day, we start EVM first because that's where a lot of liquidity is. And that's what I think is important. Now, but also I would say, look, it's not about where things are going as well. And a lot of attention on the SVM, a lot of attention on other ecosystems, other VMs, right? And things like that. And so I think it's really important that we maintain an open mind on it and be able to support multiple types of things. So we're open. I'm not religious about any of these things, but I do think it's important to keep an open mind on all of it.
Yeah, for sure. Like over the years, I have seen some founders going with other chains with much less liquidity. And then that sort of put them in an isolated island situation where, oh man, we're here, but we get access there. We can do this. And then who's going to come and build on this? Who's going to come here and develop? Then they got into a grand sort of program and it's just basically paying for people to come in and build. There's not that organic growth. So I think that's a really good point about EVM. And I was looking into Plume, and there's 2 core products. If you want to expand more on those, I think super interesting what you're doing.
Yeah, it goes back in this idea about this full stack ecosystem, right? Which is we focus a lot on making it easy to interact with. So our core product is the blockchain itself. We maintain an EVM chain. Now, we have 2 products that are surrounding that. We want Plume to be the easiest place to bring things on chain. That's the first piece. And then the second thing is to make it the easiest place to execute and transact with those things on chain. So the blockchain itself is the second piece. The first thing, how do you make it easy to bring things on chain? We have 2 products here. And a lot of people say, maybe you can zoom me out. A lot of people think RWAs equals tokenization. It's part of the story. It's just not enough though. Like at the end of the day, I think tokenization is a subset of what it is, but it can be much more. Like you can buy the underlying, but you also just own a digital representation of it and you can just bring on the data. So I think that to me is like what is really interesting and important and what matters. If we look at those types of things today, there are two products we've built to support that. Number one is something called Plume Arc. Plume Arc is our tokenization engine. It's a modular tokenization, so it makes it easy to bring anything on chain. You can do watches, you can do cards, you can do gold, you can do real estate, you can do equities, whatever you want. And we make it very easy, fast, and simple to do. And we use all the best and the latest stuff out there to make that happen instead of building something new. So that's number one. We want to make it easy for anyone because there's more stuff off chain than on chain. So you want to make sure the gate and the bridge to bringing these things on is as easy as possible. Right. And today, a lot of these products don't exist. They suck or they're expensive. And so that's a big barrier. Number two, this is where I think our view is different than most people in RWAs, is that to me, real world assets is not just like a tokenized treasury bill. If that was, it'd be incredibly boring. To me, what's interesting about doing things on chain is you can do new things that couldn't be done before. It's not about mirroring the real world on chain. It's about using that as a foundational piece to create new things that couldn't be done before. And one of those things is by bringing real world data on chain that's often ignored. We have a product called Plume Nexus. That's what this is. Today, if you look at the oracles today, they give you crypto prices, right? So I can get the price of Ether, BTC, or different assets. Now, if I wanted, say, CPI data, inflation data in the US, if I wanted GDP data, if I wanted crime rates, if I wanted anything else, it's not easy to get. So we want to also make that easy to bring those things on chain so you can begin to use them. So as a simple example, one of our protocols makes it easy for you to take out like a levered long. So you can take like a 50x levered long on Pokémon cards. And you don't have to tokenize every card in the world to do that. Right? What you can do is just bring on a price feed of these cards and then build a market around it and then put it into perp stacks. And now I can trade that thing. That to me is where it starts to get interesting and exciting, is you can start to create new things you couldn't do before, because you could take that same analogy and go even further. So if we're bringing on a digital representation of Pokemon card, I can go even further. I can bring on digital representations that doesn't exist in the world. I can start to do things with one of the protocols makes it easy for you to trade cultures and countries. You can level long America and short China. And what is that? Behind that, America is a collection of like 50 data feeds, 50 data points, right? Again, it's GDP, it's population growth, it's sentiment, it's crime rate, it's all these things, right? And you weight each one differently, you put it into next and you have a chart. And now I can trade that. And that's the simplest way to go from idea to position or be able to take a stance on something. And that's something you couldn't do before. Everything today in the real world is done by proxy. If I wanted to bet on AI today, what do? You buy NVIDIA stock. But it's a really poor way to bet on AI because one, NVIDIA stock is very expensive. Two, you have to think about a million things you're betting on an equity. Well, you want to bet on the actual thing. So like today, if I want to bet on Sam Altman, what do? I'll probably buy WorldCoin. And that's exactly how WorldCoin trades. When Sam gets fired, WorldCoin dumps. When Sam gets rehired, it pumps. When Sora V2 comes out, WorldCoin pumps. Like that, all these things are done by proxies. If you want a BlackRock proxy, what do? You buy Ondo. I think that to me is where you can get a closer representation of what's going on and like how to mirror that. And that's another way to interact with the real world that you couldn't do with just pure tokenization, right? Even if you flip up a dex screener any day of the week, it's all real things. These are all representations of the world because people want to speculate on the real. People want to interact with the real world on chain, but it's done in a really poor way. You either have to just buy a proxy token at a $60 billion FDV, or you go into a 10K liquidity shitcoin and hope that works. And so to me, that's like what we're trying to do in addition to core tokenization, right? You bring a lot of things on so you can access the underlying asset. You can also do a speculative thing. You combine these things, and that's what creates liquidity in markets. You combine speculation with owning the underlying. That's the commodities markets, the Forex works. That's how these things happen. So it's about combining things together that creates like robust liquid markets and creates a real value for the asset and as well as the people that are bringing this stuff on chain.
Yeah, that's very interesting. So you think it's fair to say that Plume is a way that an ecosystem that I can come in as a founder and plug in, let's say I'm doing tokenizing invoice bills and plug in my product into the Plume ecosystem and have access to all these APIs, on-chain verifiable data.
That's right. One, like let's say you're doing tokenized invoicing. You can bring it on chain. One, it's distribution, finding an audience, finding a customer base, finding users, people to hold that stuff. Number two, it's also a way to access liquidity. Third, it's composability into an ecosystem, which is making sure that if someone's holding an invoice token, you can go take a loan out against it. We can help see that, set that up, right? And make that a thing. And the last thing is be able to give that asset more context and more color, meaning put this into an index. Maybe somebody wants to create a new index of all the different tokenized assets out here, right? Or let's say it's a Medicaid. We have this today. It's Medicaid invoices. In America, Medicaid, like we do things through a very strange system in America with Medicaid. The big picture, you can build the government for all your healthcare, right? And it basically never gets rejected, but you have to take a long time. So people can sell them and do invoice finance against them, but very low risk. And so that's a very clean asset. And so maybe you want an index of all healthcare stuff, right? And so someone can just open market, just buy a bunch of these tokens related to invoice healthcare, put them into an ETF now or some kind of index, and now people can allocate into that index. And so to me, that's like how it goes. As someone who wants to tokenize an individual asset, you come do that. If you have something there on the other side, if you're a builder, what we want to do with Plume Arc and Nexus is to get people away from having to own the asset to build an RWAs. If you want to do stuff in like real estate on chain, you shouldn't have to own an apartment building, right? If you want to do stuff in like collectibles, you shouldn't have to own a collectible store. You should just be able to come in and experiment with stuff. So by building these tools, whether they're both digital representations or be physical representations, you can pull these things on chain now. And then now just as a straight up developer, I can combine and mix and match these tokens together, right? And create things that I want. So you can just expand the market of builders here. Right? I think that's important too.
Do you think that flexibility that you've built into the core of Plume that enabled right now, I'm looking up and you have over 180 apps and I believe over $4 billion in value in this ecosystem.
Yep. Yeah, that's exactly right. And that's been our belief from the start, which is many things in RWAs are one thing only, just treasuries, just private credit, right? I think the value is in diversity. It's in esoteric items. And we're crypto people, which is, I don't control any of this and I shouldn't. This is an open ecosystem. Anyone can build whatever they want and the market will choose and decide. And the only way to build that market dynamic in that ecosystem is to have everything. And we're also just like aggressive people. I do want everything on Plume. I want every road out. So we want it all. But I think that's part of it, which is why we have such a diversity of assets, right? You can come to Plume there, you can trade, you trade sports cards. There's expensive art. There's classic wine. There's high-end liquor. There's like low-end liquor, right? You can do things like loyalty points. You have tickets, all kinds of stuff. You can rent tables or clubs or whatever. You can do all these things together. But also you could do treasuries. You can do sovereign debt. You can finance a large company. You can own a piece of hotel or whatever it is, right? It's all about all those things at the same time.
Yeah, fascinating. And regarding, do you have any plans in launching a token and how would the token interact? Is that I don't even know how to pronounce it, but is it the launch part? Because I never seen something like this. Is very fascinating.
So mainnet will come out soon in the new year. And as a result of mainnet, we were going to progressively decentralize things over time as well. And that's going to involve the classic methods of doing that.
How's the token going to interact with this ecosystem? Is it necessary to do transactions?
There's a bunch of ways to do it, and we'll share more as it comes. But big picture, the way to think about the token, at least in my opinion, is in many ways, the first real world asset that people will get exposure to is the Plume token, because that's how they think about real world assets. That's how you get exposure to it. And then of course, over time, to me, it's part of the onboarding story. It's part of the path to becoming more and more involved in RWAs, right? First, the token. If you like it, then you can come in and bridge over to the ecosystem, begin to get involved in maybe a bunch of indices, or maybe small risk, high risk, low risk, or whatever, and you just pick one and allocate there. Great. Then you can go even deeper, assemble your own basket if you want of a bunch of different things, then get into synthetics or whatever, and then maybe start to build your own baskets. And so to me, that's like the progression of a lot of usage when it comes to this kind of stuff. So the token is the first sort of interaction point, which means you want to train people or at least educate people or give them a flavor of how the token will work and what the value of the ecosystem. Like it's almost a microcosm of the whole ecosystem, right? When you hold this token, you should get a light feel of what the whole thing is. And what is that? It's going to be yield. It's going to be exposure to different types of assets. It's going to be usability across these things. So that's how I think about it, at least. There's a bunch of stuff coming as it relates to the token, but that's the user experience I think that matters for this token. It's not just a token for the network. It is the first and maybe original point of RWA interaction for most people on chain.
Honestly, myself as a VC, and I've got access to a lot of deal flow over the past couple of months, I have not seen anything similar to what you're doing. And that raises the question is, I believe yesterday you finalized your first Series A round. You raised $20 million. Congrats on that.
That's right.
How was this process of pitching to VCs something that's so on the forefront and the vanguard? Like this is not something very common in the market.
It's not very fun. I always like telling our story and also hearing real feedback. Like I'm not shy about that. Some people believe what we're doing. Some people think it's nonsense. That's okay. So being on the streets and telling our story, I think is great. No issues. No, I'd say comparatively speaking, like you said, compared to other friends of mine who are building X, Y, Z, or people doing ABC, it is harder because you have baggage from the word RWA. Because people think it's another centrifuge. Do people want that? That's not clear that people do. So there's that baggage. And then number two, when people think about RWAs, they tend to think regulation, TradFi, institutional stuff, which is part of the story again. But you can see like from the things that we're talking about, it's more than that, right? To me, it's more DeFi, it's more crypto than TradFi stuff. People tend to think that as well, which is also a barrier. And then lastly, like you said, it's just a new area. It's not as easy as, let's do LSTs on a new chain. Or we'll do some new AI token in some new ecosystem, or we'll do it's a new lending market here, or a new DEX here, and you can just bet on the ecosystem and bet on the projects. It's a little bit different than that. And so it ends up being tough. to get it. Fortunately, we found some great investors and great backers who really do understand this. Often they sit at the intersection of both these worlds, and we've been just grateful to have their support and their help and their understanding. Fortunately for us, the sort of market is changing at a pace that really leans into our perspective and our view with all the macro stuff happening. So it's been great, but yeah, it's not straightforward because when you deal with the reward, it just sucks is the honest answer. It's slow. It's hard to deal with the reward. We just spin up the protocol, we get some audits and we send it and we can start, especially let's go like in BTC land. You can drum $1 billion in TVL on the protocol like pretty quickly, right? Now, making it useful, that's a different question. But at least like getting the initial bits going, it's like fairly straightforward to make some of these bets. And so first of all, what we're doing just has a lot of extra dimensions, and extra dimensions means thinking. And some people don't like to think, but that makes it hard.
I think it makes a lot of sense. Is there any advice you'd give for the founders listening that are out there trying to raise and the door closes and they go back home and they draft a new pitch, or maybe they really believe that what they're doing is the thing, but they just feel that they don't understand?
It's always a tricky line. And you see this a lot as a VC, obviously, right? I was an investor before too. I did venture for a bit. I was mostly a founder, but I've been a VC too. And I think I learned a ton from being a VC, to be honest, about how to think about things and where founders are wrong. I think VCs are wrong a lot too, for what it's worth, but founders are often wrong too. And founders can get way too attached to their own nonsense because it's your baby, you came up with it, you have a lot of pride around it, blah, blah, blah. So people can really get overly focused and attached. And you have to know when to call it and when not to. But because on the other side, a lot of times VCs are just straight up wrong and they just don't see it. And so if you were only listening to them, you would never do anything but consensus bets because generally speaking, VCs like follow, right? Generally, you're chasing the deal versus picking a new thing. That was my experience. My experience, it was a lot less picking than I thought. It was more, we all know the hot deal, it's more trying to get in. And that was my experience with it. And so if that's the case, then you shouldn't listen too much either, at least in the beginning. And so if that's the case, knowing when to call it is a big thing, is a big deal, but also staying true to like what you want matters a lot. I just encourage your view too. I always think there's two parts of a great startup or a great company, a great project. You have to have a great founder. That's a hard requirement. No great founder, you're fucked out the gate. There's just no way because that's one thing you cannot change. But something you also need is a great market. And without a great market, there's nothing either. And so you can have a great founder, crap market, company's still fucked. If you have a great market, bad founder, it could still work, but probably not. You need a great founder. And so for the founder, what you have to really believe is, are you in a great market? And is this the right market? Is there something new here, something interesting that's actually happening? And if it is, it's obvious. Like the fundamentals will always tell you the truth. Doesn't matter what VCs say. If people are using the hell out of the thing, you're going to be fine. If everyone's dying, it's going to be fine. It may not be easy. It may raise a lower price than you want or whatever, but ultimately it's always on you as a founder. You have to communicate the story and you have to be responsible for that. You have to keep the business financed.
Yeah, absolutely. And what do you think is the core component for a great founder? Is it resilience? Is it not giving up? Is it not sleeping and just putting everything to this project?
I think it's a bunch of those things. At the very core, it's just not giving up. It's being dumb enough to not give up, honestly, because in many ways you should. Like it is very stupid. Like the spreadsheet says you should give up and just get a job if you were to like map out your lives. So I think at the core level, it's that. Paul Graham writes as like being relentlessly resourceful or something. And there's it's called like having the juice, which means that like you have an edge in some area that others don't. So you can just move a little bit faster and get a little bit more done. And maybe that's great engineering talent. And you're just like, when it comes out, you can recruit engineers like nobody else. Or you can write the best product and build the best protocol like super quickly, or whatever that is. Or maybe it's going to market. You're incredible selling, so you can get that done. Maybe it's raising money. You can raise more money, which you can hire the rest. Like you just need the juice, and you can always tell when it's there. It's hard to articulate when you see it. It's not like you don't really know exactly what it is, but it's the magic there. Doesn't mean it always works, but you have to see that at least. And if that's not there, I think you're cooked. But in my opinion, that's what a great founder is. You always know when you see it, but it's very hard to say what it is. And after it's easy. Right? You can always explain it, but in the moment, it's something weird, but I know it's good, but it'll work. But usually these things are messy too. But my experience is like, it's always messy. Like someone who's great at something is usually very bad at something else. And that's just how it works. And you have to learn to ignore that, or at least understand how to complement it to make it work, because that's how founders are. Like the crazier, the better, but also then they're crazy, that's also an issue. So I don't know. What do you think?
I think that we should really know ourselves really well and know where our skills stand out. And I even have seen, even with myself, I start hiring people and I can hire people that are so much better than I. And maybe it's just better if I can manage everyone and have those outputs resulting in, wow, this is fascinating. And sometimes I see with founders, sometimes devs that are like, no, I need to code. I need to keep coding. And you can hire someone that's better than you, that's been doing it for a while. And then you shift code velocity and then things are moving. So it's a humbling lesson. And we have to look a lot of times into ourselves and think and cross that line and find the balance. Where should I keep getting involved? Should I keep trying this, or step back and look into the whole picture if this is right? And so a question that I get asked a lot by founders, but I can answer, and you can answer this better than I for sure, is should I move to Silicon Valley? Is there a competitive advantage in being there from VC standpoints, from peers that are working in the same industry or project? Or can I just be in Lisbon, Portugal, or any other city in the world that is not as super competitive technology-wise, or most of the VC firms in the world?
I'm very biased to this. I think you have to be here. And I think here's actually New York, for what it's worth at this point. In crypto, if you're doing AI, you got to be in SF. But if you're doing crypto, you got to be in New York. And there's a pro and con to it, in the sense that the pro is you're around a lot of like-minded people. It generally is going to raise your ambition level. It's going to increase your speed, because you're going to be embarrassed that everyone's moving faster than you. And you're going to increase your network, and just like your sort of rate of learning increases a lot because of just pure exposure. You're just going around a lot of the nonsense all the time, right? The downside is you could fall in love with that and forget the real thing that matters, which is building the product, making it work. And so like some people go there and just get lost in the mix. I mean, just all they do all day, right? You just like going to events and meeting people, and you know everybody, but you build nothing. And so that's the benefit of not being here, which you could focus on building something great. And the truth is, if you build something great, they'll come find you. That's the reality. If you build something great, like people will find you. You don't have to go find anybody. But the problem is, sometimes it's not always easy to build something great. Not everyone is Jeff. Not everyone can build Hyperliquid, but it's learning. And that's where it's good for that. And that can increase your cycle time when it goes to those things. But if you can land it in one shot, stay wherever the hell you want to, it's going to be totally fine. They will find you.
Yeah, for sure. I think that's a great advice. And a lot of times we get caught up in all the events or conference, especially in crypto. There's all these conferences around the world, and then I haven't been building anything. There's no product that's actually delivered over these last couple weeks or months, and you just found yourself socializing over.
Yes, exactly. Made a lot of friends, but that's it.
Yeah, it comes with that drawback. But for sure, I do see a lot more activity in terms of venture capital in SF, or I think being placed there, definitely there is a competitive advantage. One last question before we close is, if we had a time machine and you could go back to when you started building Plume, is there anything you tell to that version of yourself?
Man, probably a lot of things, to be honest. There's a million things, but they're all too specific. I think the real thing I would say to myself, which is the accumulation of all these things, is to just believe it more. And not to say we didn't believe it, but I think we could have gone even faster if we had really pushed on it, because we were very practical. We wanted to be sure that there was something going on here. We wanted to really try and test and talk to people. And I still think it's the right thing. I would say this: we tried not to hire people until we raised money, as a simple example, because we wanted to be sure that we took care of people. Well, why hire you? We take it seriously. We want to make sure that we treat your life seriously and we're respectful of that person as well, not just hire them on a whim and hope it works. If it doesn't, sorry, tough shit. Like, that's not how we do things. But on the other end, there's an argument to be made that you should do things. Do it all at the same time, right? Because we believe. So don't wait to raise money and hire people. Hire them now and move even faster. We always had maximum belief in what we were doing, but we were very practical about how we built things. And I think it actually led to a bunch of good habits around how we do things today, because we're more rooted in the fundamentals. But I think every founder says this. When I used to work for founders, I used to think it was so fucking annoying when they would say this. And now I say it all the time. But we got to go faster. Like, we could do more. And that's exactly what I feel like. I think if we just rushed even faster, we could have done even more by now, which is great.
I think that was great advice. And definitely that's something that's in the mind of a lot of founders. They're right now building, deploying, and trying their best to go to market. Chris, where should people follow you? Any socials, any websites?
We're classic people in crypto Twitter. Like, we're all over the place. It's Plume Network, right? I'm at Chris Yin, so you can find me anytime. We're in Discord. We're in Telegram. I live in Telegram all day. I'm sure you do too. That's like where to find us anytime. And then we're always at different events. And so if you want to come and hang out and meet the team, just like you said, we're all the nonsense conferences, we're always hosting events and like meeting people for our developers, for people who want to build and interact all over the place. We do workshops. So it's not even about these conferences. So I would say online, we're always around. Anytime, come ping us anytime. And then secondarily, if you want to do something in real life, like, we're always around too. I'm always around, ping anytime, and would love to chat with anybody and everybody. If you have anything around Plume, or even not, just to talk about crypto and shoot the shit, like, we love that too.
And one thing I'm curious, if I'm building a project and I want to get involved with Arc, is there a formal process that I should submit or get early access platform?
Totally. Yeah. Just hit the website and just click on Arc, and there should be a button to take you there. And I would say there's forms to get like early access, because look, it's a real thing, tokenizing, and we're tokenizing in some hundreds of millions and billions of dollars. That's not something you just click a few buttons and do without some guidance. I always hate it when the first experience we have with someone is through a form. I think it's terrible. I hate filling out forms, and I usually just fill it out in blank and just move on. So if you don't want to fill it out, don't fill it out. Just ping us. Don't let the form be the gating factor. The forms are just there to be there, but we're happy to just talk to you anytime. Do you want to use Arc? Get in touch, DM us. We'll reply, guys. guy and we can talk. Just DM us on Twitter, hit us in TG, so we can just talk about it and get it going.
Awesome. Chris, it was a pleasure to have you.
Thanks so much for having me. I appreciate it.